If everyone watching this video rushed to withdraw their money from the bank at the exact same time, the entire financial system would collapse before sunset. Not next week, not next month, today. That's not a conspiracy theory, that's not speculation. That's how the system is designed. Because the money you think is sitting safely in your bank account isn't actually there. The moment you deposit cash into a bank, it stops being your money in practice and becomes the bank's raw material. They don't store it, they deploy it. Loans, investments, leveraged trades, interest-generating assets. Your deposit becomes fuel for their profit engine. Meanwhile, you're told a comforting story. Your money is safe. It's growing. It's protected. But what they don't say is this. While your balance sits still, its purchasing power is quietly shrinking every single day. Inflation eats it. Fees nibble it. Low interest starves it. And the system that promises security is actually designed to keep you financially dependent on it. Today, we're exposing 14 money secrets banks would rather you never understand. Secrets about how they profit from your trust, why debt is their favorite product, and how the system quietly rewards the wealthy while charging the struggling. Pay close attention, because once you understand these rules, you'll never look at your bank the same way again. Let's start with the first secret. Keeping money in the bank can actually make you poorer. Most people grow up believing the smartest thing they can do is save money in a bank account. It sounds responsible, safe, mature. You deposit your savings, earn a little interest, and feel like you're moving forward financially. But here's the hidden reality. If your savings account earns 0.5% interest while inflation rises 3% per year, you're not growing wealth, you're losing purchasing power. Imagine you deposit $1,000. After 1 year, you earn $5 in interest. Sounds fine, until you realize prices rose 3%. That means your $1,000 now buys what $970 used to buy. You gained 5, you lost 30. You didn't earn money, you lost $25 in real value just by leaving it there. Scale that across years in larger balances, and the loss becomes massive. That's the pattern you're going to see again and again. Fast benefits for them, slow costs for you. Secret number 2. Banks create money out of thin air. Most people think only governments create money. They imagine printing presses and central banks controlling supply, but commercial banks also create money every single day through lending. Here's how. You deposit $1,000. The bank is legally allowed to keep only a fraction of that as reserves. Let's say they keep 100 and lend out 900. But when you check your account, you still see $1,000 and the borrower sees $900 in theirs. Now the system shows $1,900 even though only $1,000 was originally deposited. That extra $900 didn't exist before. The bank created it through lending. Multiply that process across millions of deposits and loans, and you realize banks are constantly expanding the money supply. And they charge interest on money they created. That's not magic, that's banking. Secret number 3. Credit cards are their favorite weapon. Credit cards feel like freedom. Tap, swipe, done. Instant purchasing power. No waiting, no saving, no delay. But they're engineered to do one thing extremely well. Keep you paying interest for as long as possible. If you carry a balance at 20% interest, a $1,000 debt can grow shockingly fast. Minimum payments stretch repayment across years, sometimes decades. Banks don't profit when you pay your balance in full. They profit when you stay stuck. The system rewards long-term borrowers, not disciplined payers. That's why credit card companies advertise convenience, rewards, and perks instead of emphasizing interest rates. Because if you focused on the interest, you might hesitate. And hesitation reduces profit. Secret number 4. The richer you are, the cheaper money becomes. If someone struggling financially applies for a loan, they're often offered high interest rates, but wealthy borrowers can access money at extremely low rates, sometimes lower than inflation itself. This creates a strange financial reality. The people who need help most pay the highest costs. The people who need help least pay the lowest. Banks call this risk management, but the outcome is clear. Wealth reduces financial friction, while poverty increases it. Over decades, that difference compounds into enormous gaps. Secret number 5. Debt can build wealth if you already have money. Most people are taught debt is dangerous, and it is when used for consumption. Borrowing for depreciating things like gadgets or luxury items usually leads to loss. But wealthy individuals often use debt differently. They borrow at low rates and invest in assets that rise in value faster than the interest they pay. If you borrow at 2% and your asset grows at 10%, the spread works in your favor. That's how debt becomes a tool instead of a trap. Same instrument, different strategy, completely different outcome. Secret number 6. Banks quietly help the wealthy minimize taxes. Ultra-wealthy individuals rarely sell their assets to get spending money. Selling triggers taxes, so instead, they borrow against their assets. They pledge stock or real estate as collateral and receive loans at low interest. They get cash without selling anything, which means no taxable event. The bank earns interest, the borrower avoids taxes, their assets keep growing. It's legal, structured, strategic, and mostly unavailable to ordinary people. Secret number 7. Trillions of dollars sit hidden offshore. Huge corporations and ultra-wealthy individuals often shift profits to low-tax jurisdictions using complex legal structures. Profits appear on paper in places with minimal taxes instead of where the business actually operates. The result? Massive tax savings. The system allows it, specialists design it, banks facilitate it. Meanwhile, average workers pay taxes automatically from every paycheck. Secret number 8. Your mortgage can make the bank richer than it makes you. Buying a home is often presented as the ultimate financial milestone, and ownership can build wealth over time. But mortgages are structured so that over decades, borrowers often pay enormous amounts in interest. On a long loan, you may repay nearly double the original price once interest is included. The bank collects guaranteed payments for decades. You carry the obligation. Secret number 9. Fees are a hidden gold mine. Maintenance fees, overdraft fees, transfer fees, ATM fees, inactivity fees, foreign transaction fees. Individually, they look small. Collectively, they generate billions. One overdraft can cost $35 for overspending by 10. That's an enormous effective interest rate for a tiny shortfall. Small charges multiplied by millions of customers become massive profit streams. Secret number 10. The system prefers you in debt. Savings accounts pay very little. Loans cost much more. The structure nudges people toward borrowing instead of saving. Student loans, car loans, personal loans, credit cards, all marketed heavily because debt is not just a financial tool. For banks, it's a product, and long-term borrowers are their most valuable customers. Secret number 11. Banks invest your money, sometimes in risky ways. Deposits don't sit idle. They're used in financial markets. Historically, risky strategies have contributed to financial crises when bets went wrong. When institutions fail, governments sometimes step in to stabilize the system, but ordinary people can still suffer job losses, market crashes, and housing declines. Your deposits help fuel those financial activities whether you realize it or not. Secret number 12. The less money you have, the more things cost. Lower-income individuals often face higher interest rates, higher fees, and fewer financial options. That means they can end up paying more over time for the same products or opportunities. It's a quiet multiplier effect that widens financial gaps year after year. Secret number 13. Financial ignorance is profitable. Personal finance is rarely taught deeply in school systems. Many people enter adulthood without understanding interest, credit structures, or investing basics. Confusion benefits lenders. The less you understand, the easier it is to accept unfavorable terms. Knowledge reduces profitability for them and increases power for you. Secret number 14. The entire system runs on trust. Banks don't physically hold all deposited money at once. The system works because people believe they can withdraw funds whenever they want. As long as that belief holds, everything functions smoothly. If trust breaks, panic can spread quickly. History has shown that when large numbers of people rush to withdraw funds simultaneously, institutions can fail. Confidence is the invisible foundation of modern banking. So what does all this mean? It doesn't mean banks are evil. It means banks are businesses. Their goal is profit, not your financial independence. Once you understand that, you stop treating them like advisors and start treating them like tools. You learn the rules, you read the terms, you question the offers, you use the system instead of drifting inside it. Because the truth is, the financial world rewards awareness more than effort. Most people work hard. Few people understand how money actually works, and understanding changes everything. When you see the structure, you stop playing blindly. You become strategic, intentional, calculated. That's when money stops controlling you and starts working for you. So now I want you to think, which of these truths surprised you the most? Because the moment you notice the system is the moment it stops being invisible. Like and subscribe if you want more breakdowns like this. And remember, this isn't financial advice, it's financial awareness. And awareness is always the first step to freedom.